All right, we'll get started here. And like I said, I apologize. You're most likely watching this from a recording, and we had some technical issues getting the webinar started on our side, and so we went live about 8 minutes late. So again, I do apologize for that. I just wanted to talk a little bit about the real estate market. Last couple webinars, we were talking about where we think the webinar or where we think the real estate market is going. That's definitely a feedback that everyone's wanting to know, right? Whether you're listening to the news, whether you're listening to podcasts, whether you're reading, the latest articles on, Wall Street Journal and different online platforms, we're all trying to figure out where it's going. And there's so much white noise out there, and there's a lot of conflicting reports, conflicting information, conflicting news. And so it's like, what do I believe? Who do I believe? So one of the things where we really hop into and talk about is why we believe the real estate market is still a good time to invest in, and explain to everyone now's the time to invest. So many people are saying, oh, I'm going to sit on the sidelines for another 6 months or 8 months and just really see what's going on. And by doing that, you're missing out on good deals. For some people, they really don't care. It's like, well, if I miss out on a good deal, I miss out on a good deal, but at least I don't have to worry about losing money. And then for some, it's like, man, I really don't want to miss out. The problem with the first group, first category, people like, I don't care if I miss out on a good deal. I just don't want to lose money. There's a chance that that bottom may not completely fall out. There's some people who still think you're going to see a huge market correction recession where we drop 20 to 40%. To me, I just don't know if I see that or if I believe that, just based off of simple facts like there's just not enough inventory. We're still at a major shortage of housing because of new construction really going down in their production back in the 2008 through 2010 recession. And then even with 2020 and COVID and material shortages and so forth. So we're seeing like this huge demand for properties and just not enough to supply that demand. So I do believe in some ways that's why the market is not going to tank, so to speak, even with interest rates going up. I could be wrong. I'm not saying that that's a guarantee. It's just my opinion. It's also an opinion of a lot of wiser people than myself who I've gleaned from and have asked a lot of questions and done a lot of research. If it does drop down 20, 30%, then it's even better for us to go in and buy more deals. So now's the time to invest. Now's the time to get excited about the opportunities. So with that being said, we're going to kind of shift course just a little bit today. I want to talk to you about how to start investing in real estate and single family. Maybe some of you have already invested and you're just looking for other deals. Maybe for some of you, you've clicked our ad because you're curious to see what we're offering, how you can start doing something similar. And so I want to give more of like an education on this webinar for you, and hopefully be able to give you some good quality information that you can take for free. So many of these gurus, they charge for education and so forth, and that's fine. But I want to be able to give you information that's going to be extremely helpful that you can apply. In some ways, it might seem very basic. For some of you, you may have heard this a million times, and it's like, oh, wow, that wasn't worth it. But the way I view that is, for me, it's all good information. I played football in high school. We ran the same play over and over and over again in practice so that we could perform it perfectly in a game. And sometimes it's good to just go back to the basics and figure out exactly what you need to maybe jumpstart maybe a stagnant season in your business. So some of the things we're going to hit, it is more geared toward people looking to get involved in real estate, but it's also going to be helpful if you are in it and maybe you just need to get a little bit of a jump start. So I'm just going to share this screen. I just got a few slides, but we'll hop right in here. What's up? Okay, why invest in single family homes? I think that's a major question that a lot of people ask. Right now, the popular way to invest is multifamily, and multifamily is great. Definitely not downplaying that and saying that's a bad opportunity. Definitely put some capital into apartment complexes. There's great upside in those deals for multiple reasons. But I like single family homes as my primary for a few different reasons. One, right now we're experiencing the largest migration in the history of our country because of the millennial generation moving into the single family sector. They're ready to now buy their first home. Maybe they just started a family. A lot of millennials waited later in life to get married than maybe previous generations. So late 20s, early 30s, mid 30s, people are finally getting married, starting families. They're getting into the single family sector. They're tired of rooming with roommates in apartments or living in their parents' basement. And so you're seeing this huge migration. You throw that in with the shortage of supply, that's really putting a lock on just what's available. And then with interest rates going up, people aren't necessarily selling their properties because they don't necessarily want to give up that low mortgage payment that they have to then go to a higher mortgage payment in a new property. So people are sitting tight, which is again keeping the inventory on the market low. So single family homes right now is a great place to invest. Another reason why I like single family homes is the fact that it's easy to liquidate. If you're in an apartment complex, it's going to take several months, maybe in years, to liquidate that deal. Especially if you're coming in from a new construction standpoint, it's usually a 5-year minimum. It's 3 years before you see any cash flow. And then the idea is to get it 80%, 70, 80% occupied so that you can flip it to a larger private equity firm. It's not as accessible. Whereas a single family home, if you need to sell, you can just throw it up on the market. Say you have 10 or 20, but you just need to sell 1 or 2. You just throw them up on the market fairly easy and liquidate that easier than you could a multifamily. Cash flow is great. Maintenance cost is a lot lower on certain items than what you would experience in a multifamily. So there's different opinions on that. Some people are like, I only want to pay for one roof. And so I'm going to, do an apartment complex and cover, a certain amount of units with just one roof. Whereas if I have, 30 houses, then I have 30 roofs. So there's different opinions on that. But sometimes it's a lot easier dealing with a single family home. And so why invest in single family home? Those are just a couple of reasons. But let me tell you how you can start investing in single family. 3 ways to invest. Very, very simple. In some ways, this is going to be very elementary 101. Private lending, long-term rentals, and short-term rentals. It's pretty simple. Private lending, long-term rentals, short-term rentals. You may be watching this and be thinking, well, what about a fix and flip? What about wholesaling? Fix and flip and wholesale theoretically is not investing. It is a job. And there is a difference. A job is putting active work into a project and then turning and flipping that project to accumulate more funds, to accumulate a profit. That's a job. Now, I know we watch it on HGTV and we think, oh, what a great investment. Let's do that. And in some ways, it's an active investment. But if you look at it through the lens of hours you have to spend in that, it's a job. And so the idea for real estate investing is to get to passive income. And that's something that we really preach here at Freaky Fast. Freaky Fast, we are a business. Yes, we're an investment firm, but that means we're managing investors' capital, our capital, and investment deals. But the operations side of Freaky Fast, it's a job. And it takes a lot of manpower. It takes a lot of hours. And for that reason, it's an active involvement in real estate. So that's why you don't see the fix and flips, and that's why you don't see wholesaling on this, is because in most investors' opinions who've been doing this for a long time, it's not investing. So the 3 ways to invest in single family homes is private lending, long-term rentals, and short-term rentals. Now, there can be variables, there could be audibles And we'll kind of dive into that just a little bit, but these are the three basic principles. So let's hit private lending. Some of you may already know what this is, and you've done this in the past, and it's standard. For some of you, maybe you're fairly new to real estate investing, and you're like, okay, what is private lending? Simplest way to explain it is private lending means you're the bank. So, for example, maybe you have a mortgage on a house and your bank is like Chase or Wells Fargo or one of these other institutions that lent you the money to buy that house. Who owns the house? You do. Your name's on the deed and you own the property. However, you also have a lien on that property, securing the loan that was given to you by the bank to acquire and purchase that property. So they have a secured position on that property. So if anything were to go wrong, they are able to take it over and then foreclose on it and own it. If it were to burn down, they're going to get their money first from the insurance. So they are in a position where their investment is secured. Here's the thing: how would you like to be the bank? Maybe you have 50,000, 100,000, $250,000 that's sitting in an IRA account and it's not doing anything for you. Or maybe it's in Wall Street making you very minimal returns. This is a great opportunity to lend that capital to people who are looking to fix and flip, looking to do like a short-term type deal where maybe the loan is a year long, and you secure your investment by taking a first lien position with a mortgage, and you have a promissory note detailing the terms of your loan. Private lending is a great way to invest. Here's some of the pros. One, it's limited liability, meaning you're not liable if a tenant falls. You're not liable if someone gets hurt on the property. You're not liable for certain issues that could come up. It would be the owner. You're just the lender that has a mortgage on that. You don't have people calling you at midnight saying, hey, my toilet is overflowing, my basement's flooded, I need you to get someone out here quick. You're not getting calls, in July, my AC just went out and it's 110 degrees, can you get someone up? So your liability is very limited on your exposure to the situations that may arise in these homes. The second thing that makes private lending so great is it's a guaranteed return. For example, if you own the property and you rent it out, there's no guarantee that you're going to get a payment. Tenant may ghost you, that may stop paying, and now you got a victim and you just went 3-6 months without collecting any rents. Well, if you're a private lender, you don't have to worry about that. You're guaranteed a payment from the note that you created with your borrower. Now, if the borrower doesn't pay, now you have the right to foreclose on that property. And then you say, well, that's not guaranteed. Well, it is, because now you're able to take over that home, and you probably are in it to where you've got some equity in the house. Now, obviously, that's not a desired outcome by any stretch of the imagination, but your investment's very, very secure, which is another reason why I like private lending. One of the pros: secured low risk investments. It's secured by a tangible asset, and if for whatever reason, again, you had to foreclose, now you've taken ownership of a home. And also, it's passive income. You don't have to worry about collecting rent or anything like that. The payments are made to you, and again, it's very, very passive, very limited manpower and hours put in to private lending. There are a couple cons. One, no appreciation. If you lent $100,000 on a house and then in 2 years it's now worth $175,000, well, unfortunately, you don't get to partake in that appreciation. You're just a lender that has a mortgage. Two, there's no tax benefits. You're going to get a 1099 and you're going to pay your taxes on the profit that you make. But that's okay. In some ways you want to pay taxes. Why? Because that means you're making money. So private lending, the pros and the cons. Highly recommend this strategy for multiple reasons. You don't necessarily have to find a house. You don't have to rehab a house. You don't have to hire the contractors. You don't have to get permits. You don't have to look and do inspections, make sure the work was complete. You're not having to hire property managers. You're not trying to show it to tenants. or find realtors if you're going to list it. It's very, very passive and very limited in what you have to do to make this a successful investment. So private lending is the first way. And again, probably, in my opinion, one of the most simplest ways to invest. I'm going to stop sharing just for a second, see if anyone's hopped on, and if there's any questions. We will be taking Q&As, and so please feel free to put your questions in the chat box, and we'll be glad to answer those. I'm going to stop this for a second, just see if anyone's hopped on. Perfect. We do have a couple of people that have hopped on. And if you don't mind, I would love to know where you're listening from. And so please put in the chat box where you're from. I want to make sure the chat box is open so that everyone, here, I'm going to change that. All right, now everyone has access to the chat box. Please let us know where you're listening from, and if you got any questions, we'd love to answer those for you. Also, we have Alex, who is one of our investor relations on the webinar with us. So while I'm talking, if you have a question, I don't see it, he'll be glad to answer it, and I can always come back to that as well. So again, thank you for hopping on. We did start a few minutes late. We had some technical issues, and so I appreciate you still popping on and listening. We'll hop back in to the second way to invest in single-family homes. I'm going to share this again. All right, so private lending is the first way. The second way is long-term rentals. And obviously that is a given. Here are some of the pros. One is a tangible asset. That's so important. Like if you were to invest in stocks and bonds, it's not really tangible. I mean, it's you have this ownership or this share of the stock that you own in a company, but it's if for whatever reason the economy were to drop, and it goes down in value, it's more of just paper, really. Here, this is a tangible asset. It's something that you can go touch, you can see it work for you. You can see that it has walls and a roof. You can see a family move in. You can see the cash flow coming in. You can see the lease. It's very much tangible, and you know that it's going to only rebound if it were to go down and there's a market correction, so the values drop. You know that's going to rebound. That to me in itself is why rentals is such a great thing. Two, it cash flows, and everyone's heard that cash flow is key, especially in a downturn in the markets. If you've got properties that are cash flowing, that is super important. The third thing is appreciation. Now, this is what's interesting to me. If you bought a house, say in the 1970s, I believe the median sales price was around 35 to 45,000, and if you would have just held on to it for 30 years, that median price would have jumped up to around 125,000, 150,000. So you're literally doubling your money. In some instances, it was even more than that, just depending on what market you're in. That's why single family is so great. And you may ask, well, what if I have to deal with the tenants? What if I really don't make that much profit per year? I've got all these maintenance issues. I got to replace a roof. I got to replace HVAC. Well, those instances, it's okay because it provides you tax benefits that you're going to need if you're investing and having a lot of passive income that you need to offset. Well, then now you can depreciate that HVAC. You can depreciate that maintenance cost that you're constantly putting in. The idea is to create cash flow that is going to then create a longer term appreciation for you. So long-term rentals is really, really good. Everyone's read Rich Dad, Poor Dad. Everyone's been to the real estate conferences. They get it. So how to invest in single family homes? Get a long-term rental. Now you may say, okay, I don't necessarily have the funds to buy a long-term rental. Now is when maybe you wholesale or fix and flip. Like I said earlier in the webinar, fix and flipping and wholesaling is not investing. It's not a passive investment. What it is it's a second job that's going to create you some extra capital that then you can then turn around and deploy it in a passive vehicle. So one way to do it is maybe have just enough money to get a loan, hard money loan to buy a house. You fix it, you flip it, and then you take that profit and maybe use that profit to buy a distressed home that would be a good rental, and you rehab that home, you rent it out, and then you can refinance it and pull out your equity and start over. It's called the BRRRR method: buy, rehab, rent, refinance, and repeat. So those are just some simple strategies about the long term. What's the cons with it? Well, you do deal with tenants and you do pay maintenance. But that's just part of it. Nothing's perfect, nothing's easy, nothing's simple. But as you can see, the long term pros weigh out the cons. And so I highly recommend you need to be looking at getting involved in investing in long-term rentals in the single family sector. The next way to invest is short-term rentals. Now, this one's a little unique in the sense of, there's multiple ways to do short-term rentals. You could do the VRBO, the Airbnb, etc. You can do student housing where you rent out the bedrooms. You can do senior living where you rent out the bedrooms. You can do rehab centers and places where when people are coming out of prison, they go and they rent out a room for 3 months, 6 months to get rehabilitated into society. So there's multiple ways you can do short-term living, and this is a great way to invest. Two of the pros, and they're very, very basic and very simple. You can increase your ROI. I'll give you a perfect example. I bought a house in Columbus, Georgia, back in 2019. And truthfully, I overpaid for it just a little bit. It was a 3-bedroom, 2-bath ranch. I bought it for $105,000. I put like 30 into it. And at that time, the value was maybe 150. So I'm not really going to make much of a profit. If I rent it out at that time, it was going to probably bring me around $1,200-$1,300 a month. Again, you're not really making a great ROI. So I shifted course and I made it a short-term rental. And by doing that, my returns skyrocketed. I was now making double-digit returns. And I was able to hold on to it for 2 or 3 years. And then all of a sudden it did appreciate. Now that house is worth, around 200,000. And I still have that same initial investment in it, as well as making double-digit returns. But also, if I wanted to refinance it, I could potentially get it on a commercial loan that's going to base that investment off of a DSCR. So it's allowing me to do it based off the debt service ratio and also the capital coming in. So I could then be able to increase the value of that home because of the influx of capital or the increase of the ROI. Also, too, it maximizes the space in dollars, meaning that again, if you rent it out by the room instead of the house, you're going to increase your revenue. So for example, maybe it's student housing and you got 5 bedrooms. So one thing that maybe student housing might be a little bit better than short term is you can rent it out by the bedroom. You can charge $500, $600, $700 per room per student, and it's almost guaranteed. One way that we've done it is we've furnished these homes and then we rented them out to traveling nurses and traveling business people. So it's corporate housing. And again, we provided everything: the Wi-Fi, washer and dryer, pay the utilities. It's completely furnished and cleaned. And so they just come in, they'll pay a premium, and that increases your ROI. Their term lease may be a month, could be 6 months, just depending on their contracts with their jobs that they have. But by doing that, it increases the ROI. We bought a 11-unit apartment complex. The apartment complex was a dump. We paid $250 for it. And, they were renting for like $300-$400 a unit, 1 bed, 1 bath unit. And it was in the medical district. So I was like, hey, let's do short-term rentals. So we went in, we rehabbed it really nice, and furnished it. And then we were able to take a unit that was rented for $300-$400 and get $1,200 a month per unit. Those are the type of deals that I'm talking about with short-term rentals. Being creative, thinking outside the box, maybe calling an audible to maximize your return because maybe you overpaid on a property. Again, short-term rentals it gives you a little bit more flexibility. Here's the con. You deal with guests. Sometimes these guests are little pains in the butt. They complain about every little thing. And so that can be somewhat of a headache. So you got to, again, just determine whether or not the squeeze or the juice is worth the squeeze. And then second, regulations with the local government. Airbnb came on fire and it just started popping up everywhere. And then all of a sudden you started seeing city or local governments cracking down with regulations. I've known a lot of people that have lost a lot of money because they maybe did a new construction short-term rental property in an area that within like 2 to 6 months of it being completed, the government changed the regulation because maybe it was too close to a church or too close to a school or too close to something. And now they ran their numbers based off of the ROIs they would get from short-term rentals, and it burnt them. So those are some cons, and you just got to be aware of it. You got to do your due diligence and your research. So just to recap, 3 ways to invest in single family homes: private lending, long-term rentals, and short-term rentals. And like I mentioned briefly in the beginning, there's a lot of variables with those. Maybe you own the single family home, it's a long-term rental, but now you can maybe do a lease back or a lease option for ownership, or you can even owner finance to the person if you feel like they're a good quality tenant, they pay their bills, and maybe you want them to take on the risk of owning the home. Then maybe you can sell it to them and just owner finance it. So you still keep that cash flow, but now you're not responsible. Now you went from owning a rental property and then you moved into the private lending sector. So there's a lot of different ways to be creative to get a really good return on your dollar. And like I said, try to stay or get into that passive role as quickly as possible. Again, that is why we're in real estate investing, to be able to sit on the beach and collect checks in our mailbox every month. I got just a couple more things I'm going to share with you, but I'm going to stop, see if there's any questions. I'd be glad to answer. And if you don't mind, if you could just put in the chat box where you're listening from, I greatly appreciate it. It'll let me know the chat box is working and making sure that it's coming through. Again, thank you so much for hopping on. For some of you that maybe missed it just for the fact that we started a few minutes late, I do apologize. We will send this link out for you to review and watch once it's been completed. Just a few more minutes. I won't drag this out much longer. Let me go back to our slides. What are some issues, some problems that investors face in investing? How can you be successful? There's obstacles, there's challenges that people run into on a daily basis when they try to get into the real estate. One, finding deals. For so many people, this is the most difficult. They got the money, they got the connections, but they just can't find a deal. And then when they do, they have someone outbid them. And it can be a very frustrating thing, especially when you're getting started. You're trying to figure out the marketing and how much you should put into marketing. And you maybe put a few $1,000 into marketing and you don't get anything from it. And that can be discouraging. And it's like, man, I just throw away money to the wind. Finding deals can be a huge obstacle that so many investors run into. The second, in my opinion, is contractors. Day after day, I hear about contractors running off with the money or doing a horrible job and then leaving their investors kind of hung out to dry. And it's one thing after another. So if you're getting new into the business, maybe you're a little nervous about that. You don't know necessarily how to start. Or maybe you're in it and it's been a challenge and it's frustrating. Now you're just ready to quit. Working with contractors is a huge challenge that you will experience. We've experienced it. We're a large company. We have 30 million under management, and we have experienced issues with contractors on a multiple basis. One of my mentors told me it's not if you have an issue, it's when you have an issue. And I found that out to be very true. Third, identifying markets. Some investors, they want to invest where they can walk and drive by the house. They can walk into the house, they can see it. And for some people, that might be hard to do if maybe you're in a market like California or Arizona where prices are really high. You just don't necessarily know if you're going to be able to get a good deal. And so you're like, okay, I maybe need to explore going outside of my personal market and try to find a market that might be a little bit more attainable. Then you create more problems. Now it's long distance. Now you might not be able to go see it. And now you got to rely on people, boots on the ground, to help get this project from A to Z. So that then creates another problem, having a good team. A good team is a title company that can service your deals, a realtor that can help you find deals, a project manager or a construction GC that can help you do the rehabs. If you decide to rent out, now you got to find a property manager. So there's all these different obstacles within establishing a good team to help you be successful. So that's why a lot of people don't go out of their market, just because they don't really have the connections. And because of that, they limit themselves, which then kind of recirculates back to problem number one, finding the deal. So here are some of the major deals that people are facing that are preventing them from being successful. And we'll talk about how we've tried to help solve that here in just a minute for investors that may fit these categories. Just basic information, how to be successful in real estate investing. This may be one of the most important things that I ever learned in the very beginning of starting our company. You win when you buy. I'll say that again. You win when you buy. So you have to know your numbers. Don't be aggressive or liberal with your numbers. Don't say you go into a house and it's pretty rough and be like, oh, I think I could rehab this for 25 grand. So many wholesalers really hurt themselves because they don't know rehab prices, and so they tell the buyers, hey, it's going to be a $30,000 rehab, when in reality it's more like an $80,000 rehab. That will hurt your credibility immediately. When I first started out as a wholesaler, I partnered up with a contractor. And I said, hey, I'll split the deal with you. I just want you to walk the deals and give me a realistic scope of work and a price so that I can give it to these guys. And they know exactly the numbers right off the bat. That also helped me be able to negotiate the price when I was trying to lock this up, because I knew I needed to be able to put a wholesale fee or an assignment fee in this deal. And so everybody had to win, the seller, myself, and the buyer. You have to know your numbers. It is so, so important. It will prevent you from losing. Believe me, there's been times where I've been a little bit more aggressive and a little bit more liberal with my numbers, and it's hurt me. If you're going to be successful in real estate, know your numbers. My mentor told me this: the stars may lie, but numbers never do. So important and so true. Two, establish a good team. I mentioned on the previous slide, that's one of the biggest issues that people have. Find a good realtor who's going to maybe bring you pocket listing deals. Find a good title company that you can grow with and nurture a relationship with that will help you, especially if you're going into a market you don't live in. With that title company, usually you'll have a good attorney, a real estate attorney, that will help you get the right deal and make sure that you're protected. And then of course your construction team and your property management team, if you decide to keep it as a rental, is very, very important. You got to rely on those people to make sure that you're successful, since you can't be there. So establishing that good team. And then lastly, I've said it a few times already on this webinar, the ultimate goal is to get to passive income as quickly as you can. That's why we're in this. Now, if you have to start fixing and flipping to get started, fine. I get it. That's how I got started. Maybe you work a 9 to 5 and you're tired of it and you want to replace that income. And the best way to do it is fix and flips. That's fine. But eventually, as you start profiting from these fix and flips, you need to start deploying that capital into rental properties to create passive income. The difference between a rich person and a wealthy person is very, very simple. A rich person has a great job that pays them a lot of money. A wealthy person is somebody who has money that is working for them, creating more money, building generational wealth. That is what we are wanting to get to. There's many strategic ways to do that. And on these webinars, we're going to help give you information, free education, stuff that we've learned from all different masterminds and groups that we've been a part of, that we paid a lot of money for. We're going to give it to you for free. The reason we want to do that is because we want to help you be successful, and we want to build a relationship with you and give you opportunities to get into the real estate game, whether it's on your own or whether it's with us. So how to be successful: know your numbers, establish a good team, and try to get to passive income as quickly as you can. I'm going to wrap it up with one more slide. How can Freaky Fast help you? We started this company to help solve the problems I mentioned 2 slides ago. Having a hard time finding deals, having a hard time with your construction crews, having a hard time putting a good team together, not knowing where to get started, what markets to identify. Freaky Fast has put together all of those things. One, I feel like that's our superpower. We're buying deals right now, 40, 60 cents on the dollar. I have 3 closes today where I'm taking over subject to properties. I mean, I'm just assuming the mortgage and I'm just paying the homeowner just a small fee, help them get out of foreclosure, and I just take over the property. It means I have very limited cash in the deal. I am now taking over a mortgage with a very low interest rate, and I can quickly rehab that property and put it on the market and sell it and have a huge win. And my cash on cash ROI is going to be huge. I have the ability to find those type of deals, and I have ability for you, the investor, to get involved with us on those type of deals and be able to take part of the opportunities that we're coming across. So we have that. We have great crews, construction teams that are knocking these rehabs out at a quick rate and getting these properties on the market. We have a great team of members inside our office who are managing these properties, leasing these properties, and managing your investment capital. For some of you, maybe you're looking to lend. That's fine. We've got opportunities for you to lend us capital to buy these properties. That's going to give you a very aggressive interest payment every month. And it's going to help you win. So if you're interested, whether it's in private lending or buying properties or investing in one of our equity funds, please reach out to us. You can schedule an appointment with Alex on this webinar. You can reach out to us on our website or give us a phone call. We want to help you. And we want to make sure that we're providing you a great opportunity to invest and to win in the bad markets and in the good. So please reach out to us. Again, I appreciate you hopping on this webinar. Thank you for being a part. I'm just going to leave it open for 30 seconds to a minute to see if you have any questions. If you do, I'll be glad to answer those. If not, we'll sign off, and we hope that you have a great day. So if you have a question, just please send it to us, and I'll answer those. And then if not, we'll sign off. All right. Well, I don't see any questions. Again, thank you so much for hopping on, and I hope you have a great day. And for some of you who weren't able to make it and you listen to this back, I appreciate you taking some time to watching this. And again, feel free to reach out to us if you have any questions or if you have any interest in working with Freaky Fast. Have a blessed day. Talk to you later.